Good day, everyone. Today we are going to talk on how to set up rules for our trading plan. Trading is an extremely challenging endeavor. It's not as simple as you may imagine it. It is the most hardest approach to make quick money. You must have a strong mental fortitude and be physically hardy before you will go into this business. Trading is not for the weak, mostly the weak at heart. It's a game designed to make you feel frustrated. Yes, it can make someone frustrated. If you are weak, you will not do well. So, it's not really everyone that has that patience to learn, to have the knowledge. So we must continue to do our best. We will not let our guard down. We will learn and relearn. That's trading. So, how do we want to make this trading easy for us? It's by setting some certain rules. You need to set some certain rules. Any game that does not have rule, will definitely fail in the game. So, now, what are those things that you need to have in your trading plan? Those rules you need to set up in your trading plan. The first one is you need to have a particular market you're taking, and the time is very, very important. The time you take your trades. What session are you going to take your trade? What market will you focus on for the day or for the week or for the month? You need to have that written down as number one rule, because if you don't have a time that you trade or you don't have a market that you focus on, you will just be confused. So we have 3 types of sessions in this market. We have New York session, we have London session, we have Asian session. You choose that particular timing that is suitable for you. If you're working, you choose your timing depending on the type of work you're doing. You choose your timing. You choose a particular market that you're comfortable with. You practice that market, even if it's on demo. Make sure you practice that particular market. Maybe if it's GBP USD, that particular instrument, GBP USD, gold, AUD USD, make sure that you know if you're conversant with a particular pair or two, it's easier for you to just look at that pair and you will know that that pair is for this. So you need to have a particular market that you focus on. Like, I love focusing on gold and UK oil. But that does not mean that if I see other opportunities, a good setup, a great setup that has high profitability opportunity, I will not go for it. I'll go for it. So you need to have that at the back of your mind. Number one, you set it down as your number one. Then the number 2 is analysis. Where do I enter and where do I exit? How do you do your technical analysis? What type of patterns do you prefer to trade on? Patterns is very, very important. To me, I prefer using pattern. I don't know for others. I add patterns to my trade. If it's symmetrical triangle, the ones I prefer, if I see triangle pattern, I will wait for a breakout. If it's a wedge, I'll wait for a breakout. If it's a flag pattern, I'll follow the direction of the trend. This is what makes you a proper trader. You know that once I see this particular pattern, I'm waiting for this at this place. I'm waiting for this at that place. Then another thing I always do is I make sure I mark up my support and resistance zones. I mark up the supply, mark up the demand, I mark up my support and the resistance zones. And once I mark it up, I'll wait for breakouts and retest. That is my strategy. I wait for breakouts and retest. And I have a particular time frame that I focus on. I move from, if I look at the monthly to get my trend, where is the market heading to? How is it? What is happening in the monthly? I move down to weekly. I check what is happening in the weekly. I move down to daily. After daily is daily. I will mark up my support and resistance on daily. Excuse me. Then I will go to 4 hourly. When I get to 4 hour, I make sure that I adjust the markups I did on the daily. After adjusting it, I will now wait for confirmation on the lower time frame. And the lower time frame I prefer using is 15 minutes. 15 minutes makes it easier for me to see some candlestick confirmation, some price action that are forming there, maybe some, if it's morning star, shooting star, engulfing candle. Once I spot it there, but I take my entry on 1 minute time frame. This is my rule. My entry must be on 1 minute time frame. And when I go there, all these confluences, I make sure I spot it down on that 1 minute. Yes, 1 minute can be noisy for some people, but to me, it has already mastered me because I've been doing it for like 9 months to 10 months now. It has mastered me. So this is exactly what I use to take my entry. Then I don't need to be, I make sure that I wait for all these things before taking my entry. Then how do I exit? I go down after marking up my plans, my zones on 4 hour. I use the 4 hour, the last low or the higher high or the lower low. I take my entry there, or I look for where price breaks through, maybe markets where price break. I will take my exit there, or I go down to 15 minutes. I check the higher high or the lower low. I'll take my exit from there. I make sure that my exit is from the freshest zone, a place that price have not mitigated, where price have not retested. Because sometimes the drawdown used to be very deep. Sometimes the drawdown will be mild. It will continue moving, but I've exited with the little profit I made. I make sure that my exit is from the freshest zone of every support and resistance. Each support and the next support level or the next resistance level where price have not mitigated or retested, that is where I take my exit. And this is part of my rule. I always have it at the back of my mind. The next one is trade management rules. Where do you put your stop? How to trade the stop? When to add to your position? When to take partial profit? Do you use recent highs or lows to take your profit, or do you use institutional candle or institutional even numbers to take your to place your stop? These are the questions you are supposed to ask yourself. How to trail your stop loss is very, very important. How to add to your position? Do you add it? Do you just pack all the positions at once? Do you add it immediately after each retest? If you're swinging, or maybe you're a day trader, you after break and retest of each structure, you place your stop loss at before the low or before the high. Or the use of Fibonacci. Like sometimes I use Fibonacci to trail my stops if I actually want to trail my stops. Then the next one is money management. How do you maximize or minimize your risk percentage in a trade? What lot size do you use per position? Do you know that sticking to one lot size helps a lot when setting up your trading plan? Like me, I prefer using 0.1 to 0.10. I feel comfortable because I always trade small accounts. I feel comfortable. If the account is up to $200, $300, I use 0.10. It and I don't add unnecessary positions. Sometimes I will split it. I'll use 0.01. I will start adding the 0.01 if the market is not clear, or maybe the market has high volume. I will use the lowest slot to be on a safer side. Like gold, if I'm trading gold, I'm very, very careful. I use 0.01, then I will now be adding my position 0.01, 0.01, see it gets to my take profit. It's very, very important. When you stick to your lot size, it helps to trim your risk appetite, and you will now know, okay, if I lose like 3 trades per day, maybe that day you go in, maybe one particular trade you're going, you know that yes, this my analysis is correct. You take a trade, maybe you take a sell, you were stopped out, you go in again, you were stopped out, you move in again, you were stopped out. It's better for you to leave that particular trade for the day. If you take 5 trades and you lose 5 trades, don't trade for that day anymore. What is there? Your money is going down. It's better to still have a little money to trade with than not to have anyone. You go back to your demo. So it's better to have little than not to have at all. Then another thing I want to talk on is setting a golden rule to avoid stupid trades and big drawdowns. When to stop trading for the day, what to do when high impact news get announced, maybe FOMC news, NFP news. If there are news, you choose. Write it down that today, Friday, I'm not trading because there's high impact news. You just don't trade for that day. You just use that day to relax. Use that day to relax. What are my most common mistakes? This is another thing you ask yourself. Add it to your trading rule. What are those most common mistakes? Those silly mistakes that do happen when you trade. Maybe anger, unnecessary emotions will come in, over trading will come in. You know, when you're angry, or maybe you now say, oh God, I'm the Lord of the trade. Anything that wants to happen should happen. No, it's wrong. You need to set it down. If you're late to your timing, your time of trading, forget that day. It's better you leave that day than losing your money. It's better to leave the day than losing your money. So let's go to psychology. Psychology is a very big aspect of trading. Very big aspect of trading. Psychology, because psychology is a personal journey. Psychological and emotional process is a personal drama. I call it a drama. You can get rid of your emotions when there is nothing in your brain. But when you fill your head, not your brain, when you fill your head with so much noise, you get the noise from here, get the noise from here, get the noise from here, it will block your head, not your brain. It will block your head. It will block your ear. You will not be able to be adaptive. Maybe you receive the good ones and drop the bad ones because there are lots of noise in your head. So psychology is very, 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 very important in trading. What is it? What is that thing that people are always saying about this pair, about this one? What are those things? Okay, face those pairs and look at it. Get the reasons why they are running away from the pair or why they are chasing after the pair. Get it, and don't put unnecessary noise into your head. Make sure you research and find out what is happening around the trading system you're using, around your strategy. Psychology process cannot be stopped. You can't elude it from trading, but you can manage it. What type of information do you gather in your head? What is recording in your thoughts? What what you gathered in this your head is up to you. That is why they say psychology in trading is a personal journey, is a personal drama. If you want to act your own in a bad way, it will yield a bad result. If you want to act your psychology in a good way, it will yield a good result. That's why psychology is very, very important. How do you manage psychology? How do you manage emotions? Emotional control. You know, we have negative emotions, we have positive emotions. Negative emotions are fear, frustration, anger, depression, stress. If you are feeling stressed, you don't need to trade for that day or that week or that month. If you're financially stressed, there's no need. You can read, you can do other things. But trading is not advisable at that moment. It means you're going to risk much. If you're feeling scared, your risk might be high or might be minimal. Maybe you see a winning trade because of fear. You will not go out from the trade because your fear of losing the little profits has already occurred, thereby limiting your profit. When the business is all about profit, always remember that the market is the king. You can be the best analyst in the world, you can be the best trader in the world, but when the market wants to humble you, nobody will be there. You alone will face it. It's your money, it's your time, it's your brain, it's everything. So you need to learn how to manage negative emotions. Manage it. And when managing negative emotions comes from maybe you are using big lot size. The lot size that you know that is bigger than your account, or having so many positions, it might yield to negative emotions. The next one is positive emotions. Maybe you're winning, you have been winning. This excitement, joy, cockiness, it will just set in. I'm winning. Oh God, Abi Baba. No. Remember the core principle. Market is always the king. Humble yourself before the market. If not, the market will humble you. When you start feeling like a boss, once you start feeling like a boss, oh, I've made money today. Oh God, I'm going to take more. I'm going to take more. You will see yourself losing because the excitement is there. And when you see a drawdown, that is not what you really want to see. You don't want to see that red. You just want to see the blue. And when the blue is not coming, oh my God, it might be a pullback. It might be in a right trade. The first thing you will do is to cut off your profit, or maybe out of excitement or over trust. Yeah, I trust this analysis. Oh man, that used to happen to me a lot. I trust my analysis. I will now start shifting my stop loss. If I shift my stop loss, I will be shifting it. Oh, when it gets to this point, the next thing it will call, margin will call, free call margin. Bah! So you need to be very, very careful when excitement sets in. You must develop a neutral emotional mindset. Free your mind. And watch, any day your mind is free when you're trading, you see everything clearly. You see the movement of the market very clear. Emotions are overcome by experience. When you have the right knowledge, fear is hard to set in. Excitement is hard to set in because you know what you are doing. And when market stops you out, you accept it by faith. No hard feelings. No hard feelings. Depression can come when you oversize your trade. Another thing again that we normally do is we try to revenge trade. I've lost $30. God, I must make it back. Who are you making it for? You have lost. There's nothing like I'm going to make my money back. Yes, we used to use the term I will make the money back. Yes, you will make it back, but you have lost. If you get a goods and maybe the goods are spoiled, the money is gone, Even if you make it in the next 3 years, it's gone. And another thing again I will advise the beginners is calm down and learn. Calm down. Don't rush to start making money. Be in a community where people that have experienced the rush, the failing, the failures, the stress, the depression, the frustration. Be in a community where people can lift you up, even if they are not making money, but they are ready to help you. Forex is not all about making money. I might not be making money, but I have the right knowledge. I can give you the knowledge. It's an advantage. I might not be a millionaire, but when you are with the people that have passed through stress in trading, it helps a lot as a beginner. It helps beginners a lot. Another thing again is greed. Build discipline and stick to your rules. If I make $60 today, I'm off the market. It gives peace. Emotions normally comes from losses. So just understand that losses is normal. Then any day you lose, take it as you have lost for the day. So negative emotions comes from losing trade. Positive emotions comes from winning trade. So that is why you should humble yourself. Remove everything in your head. The noise is in your head. If you're winning, remove the noise. You can even take a break after a winning trade. You can take 1 week off. If you feel that it's getting to you, you can take a week off. This game is a mental game. We need to have a clear mind before moving into trading. Work on yourself. Train yourself. There's something they call compulsiveness, as in every day you practice. As you are practicing, the trading, the market structure, everything, the analysis is becoming part of you. And as the whole thing is becoming part of you, that is how you flow. You flow with the market. Be adaptive, be receptive, be adaptive and receptive at the same time. When the market changes, maybe because of news, or because of inflation, or because of recession, or because of anything, adapt to the change. You must not live in the past. Adapt to the change. You must be receptive. You accept that the market has changed. This is no longer the way it used to be. If you watch, market is no longer moving zigzag the way they told us. It's no longer moving zigzag. We see where a market has broken. Market have broken structure here. Market to pass it and go to retest the supply. So you follow the market. That's why we put our stop loss at the right place. When the market got to that place, it's cut off your loss. Make sure you cut your trade off, your loss off. Then maximize your profit. When you are in a profitable trade, you add to your positions. This is why they say I'm very, very aggressive when it comes to profit making. If I see that if I'm using $20 and I see that I'm using 0.01 lot size, and I see that the trade is a winning trade, I'll be adding 0.01 till the place I'm taking my take profits. That is how I make $20. You can see $20 to $200. But when I'm losing, my stop loss is always $5 to $10 because I trade small accounts. So we need to be very, very cautious of all these things. Become the best version of yourself. Psychology is the main focus on trading. This is the first thing that we are supposed to. I think they taught us psychology before any other part. I'm not sure that we'll be failing. Let's keep pushing and keep pushing. Let's discipline ourselves. Know our risk management. We have mental risk management. When you train your mind, develop the right mindset for a long time trading. We have to discipline yourself. Develop the right mindset. Ask yourself question, why am I in this business? Why am I in this game? Is it for long time success, or to build a career, or a short time success, or you just want to make money sharp sharp? Don't break your rules. Follow the process. Don't break your rules. Make sure that all your rules is obeyed. Utilize your stop loss, maximize your profits. It helps a lot. It helps a lot. It helps us a lot to maximize our profits. Then set your golden rule should be, these mistakes I've been making for long, I will never make it. Get down a trading plan. Set your days, your starting balance, your profit targets, your expected balance, the lot size you're using for that day, then your instruments, the pairs, your what you're going to trade for the day. Then by the side you can get a comment, what's your remarks, what you feel, what happened that day, why do you lose, why do you profit, what happened when I was making money, what happened when I was making money. It's very, very important. It's very, very important in trading. So please, trading plan is very, very necessary. And when you follow your rules, you'll be at peace. Peace comes from a free mind. So let's be guided. Thank you.